presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compact Market Wrap YouTube update for November the 10th, 2025. Thank you for joining me today. First of all, don't forget to subscribe to this channel so whenever I post an update, you will be notified. Just click on the subscribe button and that way you will be automatically notified. Looking at the numbers last week, markets starting to feel the shutdown a little bit, and that was a lot in the media, flights being canceled and all of that. I think, again, a lot of it was blown up by the media, a lot more, but the market started to feel a little bit of that. And we were down last week, even though on Friday we were down a lot more and came back up. Today we're having a great day in the market, but the S&P was down 1.61, Dow was down 1.21, and NASDAQ was down 3%. But year to date, the numbers are still looking good, 15% for the S&P and about 20% for the NASDAQ overall. Emerging markets did not get affected as much. We saw the emerging markets down 1.39 and the EFA was down only 0.76. Last week, the worst sector, technology, took a little bit of a correction, a pullback, whatever you want to call it. And that was, I think, healthy for the market. It was getting way ahead of itself. And now we're starting to see we saw a little bit of a pullback and now we're coming back up. Oil below $60 a barrel now. That's where we are in oil, and that I think will go throughout the economy because oil is used for everything, production, transportation, everything. So I think that'll continue to support the market, lower oil prices. Interest rates did jump up a little bit the week before. Last week they stayed right where they were at 4.11, but we were just hovering around 4, so we've gone up slightly in interest rates. A lot of data is going to come out over the next couple of weeks. We're going to see two payroll reports are going to come out for October and November, and that should give us a good idea what the Fed is going to do next month as far as interest rates go. If we do see weak payroll numbers, then the expectation is that we are going to see a 25 basis point interest rate reduction, and that will help the market. But we need to get the data on inflation, on CPI, on the payrolls, and that'll give us a better idea of where the economy is. Now, the private guesses are that we created 52,000 jobs month over month, but October is supposed to be really negative. That would be something that we have not seen since June, and June was 13. Here we're looking at minus 3.5. So we'll have to wait and see exactly how the payroll numbers come out, but that will really dictate what the Fed does in December. Active ADP numbers, I don't pay a lot of attention to ADP. They're all over the place usually, and they do not give us a good idea. But consumer sentiment was down quite a bit, and we're seeing non-manufacturing PMI below 50, and that shows that the non-manufacturing is contracting. Over 50 is expanding, which is good, but below 50 is not good, and that's what is showing in manufacturing right now. Looking at the technicals, we came back, tested the 50-day moving average. This was the first test that we've seen in quite a few months since, I believe, last month we came and tested it slightly, the 50-day moving average, but we got below it on Friday, but closed above it. And today we gapped up. This is the high on Friday. This is the low right here. So there's a space, and that's called a gap, and we gapped above the 20-day moving average also, which is a positive sign. Overall, markets still seem to be hanging on. We're still looking at last week was sort of not a good week overall, but now we're right in the middle. We need to get above last week's highs, and that would be a positive sign on the weekly charts. NASDAQ gap down, came and tested the 50-day moving average, which is this blue line, but today gapped above, leaving again a gap. This is space between the high on Friday and the low today, and we gapped above the 20-day moving average. Seems like we're set for another rally to the upside. The fifth wave is starting now to the upside. NASDAQ weekly is still very similar, but it's a third wave, not a fifth wave, which is a good sign. And we have not even seen the fourth wave pullback before we see the fifth wave rally to the upside. So this is 3, 4 down, 5 up is usually how it works. 10-year note interest rates did bounce back up. They were down to about the 3.95 area. We came back up. We're about 4.11 today, which is just above the 50-day moving average. But I think there was some pressure being put on the interest rate market because of bonds, because of the government shutdown. Gold came back. This was third wave high, fourth wave pullback. Should start again the fifth wave to the upside. Gapped up today above the 20-day moving average on the GLD, which is GLD is the ETF for physical gold that you can buy in the market now. You buy, these are warehouse receipts, and supposedly the gold is in a warehouse, and you're just buying the receipts for the gold. So it's like buying gold, but you can buy it in your stock account. High yield bonds, which had come down quite a bit, came back up at the 20-day today. 80.61 is the 20-day moving average. We are 80.63 right now. We need to get above 80.81. That's what I would like to see on the HYG, which is the ETF for high yield bonds. So I'd like to see it get above that. So we'll have to wait and see if we get some more follow through over the next couple of days. Those, again, don't forget, you can also go to compact.com, click on Insights, and you can get a much more detailed view of the market when Javed and I do a podcast, which is about 30 to 45 minutes, but it's a much more detailed look at the market right now. Those are my thoughts. Those are my observations for November the 10th. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.